We had a parabolic wedge top, so we had 1, pause, and then 2, and then pause 3, or it could be 1, 2, and 3. Either way, you've moved up very fast on a high time frame. You can see this 60-minute bull bar. All right. Good morning, everyone. Good afternoon, good evening. Yesterday we had a big bear day, and when I see a strong reversal, the first thing I do is get one of these trusty fib tools. I've got a line at 1/3, 1/3, and 50%, and this is a really handy tool in price action. Obviously, the 50-50 splits 1 risk to 1 reward, and with this fib tool, you can split 1 risk to 2 reward. So we shot up pretty high. We had a bull breakout, and then I thought it was a reasonable high one buy above 4. You could also buy the close of that 15-minute chart. I bought the 15-minute close on the test back to it, and that was a nice trade. It's not usually, if trading was that easy, then everyone would do it. So it's a little bit of an anomaly today, but it is the first of the month, and the first of the month often has pretty big moves. So that was handy. You got nothing to sell, never triggered below 7, no reason to get out, and then up to the weekly magnets, as Al said. We had a parabolic wedge top, so we had 1, pause, and then 2, and then pause 3, or it could be 1, 2, and 3. Either way, you've moved up very fast on a high time frame. You can see this 60-minute bull bar. So if you're a 60-minute bull and you bought low, you're pretty happy with your profit. And if you're looking to buy that big bull bar, you really want that follow through, which the bulls didn't get. And it's no surprise, it's up in the moving average, stops down here. Whereas if I'm a bear, I can sell and scale in, and I've probably got a better trader's equation. Deep pullback, broke a trend line, tried to close the gap. So the reason I had this fib on here before is when we raced past it, I was long, so I'm not just going to put an order in space there, but it was interesting that we just blew right past, never got a second bear bar. So it wasn't surprising to me, at least, that we came all the way back to here. And that's where traders were buying. I think Al was buying 16. I missed the buy on my limit order on just below 20, didn't quite go down there, and then I bought on 23. When the market's climactic, it makes you chase up. So you try to buy at a discount and you don't get in, so you have to keep dragging your orders up. So what do you do here? 1, 2, 3, 4, 5 bars in the pullback. This is too strong for a very successful bull trend, and there'll be sellers above and sellers in this top third, betting we're probably not going to go too far above. We've got the middle of the week, as Al said, we've got the high of yesterday and the breakout point. One of the other reasons for being long today, at least, is on the monthly chart. I'll make that bigger. Is this a small pullback bull trend, and traders buy the close of bear bars. So even though this is a potential sell signal, if this is a small pullback trend, there's going to be more traders looking to enter, knowing that the moves down are very small and the bears haven't triggered any sell signals yet on the monthly. If you look at the weekly, this is the first sell signal they've triggered, and the market probably needs a second one to reverse it. So I think sideways probably a little bit more likely anyway. So what do you do here? Well, we're in the middle of a trading range and we're in the top part of it, but bull bars are closing on their highs. Difficult to trade with a limit order below bull bars. So it makes me think we're still going to drift up. Traders probably at the lows and at the moving average. Can you sell below 25? Traders will, but I think it's only for a scalp still. Oh, that's inside bars. I was researching inside bars on the 60-minute chart earlier. It's just handy that it lights it up. So if you're scalping, you've got a couple of legs up back to 12 and the middle of 12. So if you're buying the close, buy the close rally, and you're buying one tick below, we got back to the midpoint of those entries. Traders buying below bars on 15-minute chart are okay. So much easier to be a bull. When you're looking at the charts and you're expecting the market to go down, and you see this, you need to consider a couple of different possibilities. The first is that anyone who's already in the market seeing this is not happy about these two bull bars. All right, unless you manage to buy all the way down here. Anyone that's short sees this and they have a problem, they need to get out of their position. And if you're flat, that gives you an advantage. That means that someone's trapped, and where they're going to get out is a place where you can get in. So one place traders would have been waiting was 5,770 on the test back, but we never came back to that price. And that's the first sign that there's a lot of urgency and traders start buying the close. And we've had a lot of that today. Close of the second hour. So did traders buy or sell the close of that 60-minute bar? Looks like they sold it. Now you've got not quite a bear inside bar because we went above it, but a pause bar with a big tail. So there's probably going to be buyers below the lows down there, and I think we're just going to fill out this trading range probably in a triangle for now. Oh yeah, thanks, let him know. You probably already realized that Al is not in the Discord. That's why you won't be able to tag him, but if we missed your questions, feel free to just share them again. If you're having trouble reading the 5-minute chart, I highly recommend going up to a time frame that makes sense to you. And to me, the 15-minute chart today was pretty clear. You got consecutive bull bars above the moving average, we're always in long. You can either buy the close there, you can wait for a pullback to buy again, spike, pullback, high one buy above this bar. So I think this is the signal bar that's controlling the price action at the moment. Even if bears manage to get down here, I think there'll be buyers below. So. Someone asked before about calling out trades. Part of the reasons for calling them out just after we've entered is because it gives everyone a chance to trade their own style. We know the moment we say we're about to do something, a lot of traders will just piggyback on that. I get it. But there are many different ways to trade the same bars, so we just allow for that flexibility. So bars about to close, consecutive bear bars, probably going to go down to the moving average. But the bears, I think, really need a 15-minute sell signal to do any damage. XGLN, why is shorting 25 a scalp and not a potential lower high MTR on the 5-minute? Yeah, good call. So for an MTR, we need to break a trend line, and then we usually need a couple of legs to test that high or around that high. Sometimes it could be higher, sometimes it could be lower. This is a very strong bull trend, and you can see the space to moving average. So a real lack of anyone selling below bear bars. So to me, I'd need to see more for this to be a major trend reversal. This gap to the moving average says that traders are not waiting for that. They're buying above. So what I think is I need to see it on the 15-minute chart. But 3 legs up to a double top, so it's a kind of dueling lines pattern. Test the 60-minute moving average. You've had a bull micro channel pause and then another bull micro channel on the 15-minute chart. So I think sideways, so probably more likely minor trend reversal at this stage. We got up to the magnets from yesterday. We got back up to the weekly breakout point. Had a lot of trading range price action. So closing gaps is what traders expect. Hi, Paul, can you explain dueling lines? Yeah, so it's a wedge top to a double top, wedge bottom to a double bottom. It's basically a reversal and then a 3 push pattern up to test that again. So if you look at a lot of double tops and double bottoms, 1, pause, 2, pause, 3, it's that 3 push to test. And so traders are not super concerned whether it's above, below, or at the same price. We've tested it, it's a failed breakout, so more likely the top of a trading range. You don't know if it's going to go and do this, but you're expecting a trading range at least, and you're in the top part of it. So your trade is scalping back to the moving average. If I'm a bear and my stop's there, sell 25, my one-to-one's down here. If you sold below the low of that bar, you needed to close this gap. I think at this stage you could be long or short. And traders are scalping. So you got wide stop and you're taking small profit targets. So bears want this 15-minute second sell signal for a lot of S's. We're still in this larger trading range, but because we kind of shot past the lower third, I think it's less relevant at this stage. So if that trading range doesn't matter, then it might be that this is going to be the trading range. Currently, we've got a breakout point open down here. We've got a small body gap here. So a bear inside bar on the 15-minute chart. You see, we're testing that high one entry on the 15-minute. As Al said earlier, parabolic wedge tops often go sideways. This is a breakout on a higher time frame. It's less likely to end up down here. It's also less likely to end up far here. So I think this is the range we'll be in today. We've done, including the gap, about 50 points. And we're still inside yesterday's range. 3 bear bars down, so even if 28's a bull bar, I think the bears will get one more bear bar at least. I got out of my long scalp above 23. We came back to test it. So if you think about a limit order trader, they're waiting for price to go up and test back. So I had an order somewhere here, it missed, and then I put an order at 50% of this range. So you get filled here. But you know it's not going to end up here kind of entry. It's try and get one bar or two and then get out. Someone says the stream is lagging. Mine looks fine. I'm just kidding. Let us know if it's coming through right. Yeah, it's fine. Nice. What were the trades you took already today? I bought the close of 15-minute bar, and then I exited at 20 points. I was patting myself on the back, and then it kept going, and then which is all right. I probably could have kept some on, but whatever. Had a good swing. Happy about it. And then tried to buy down here, missed. Tried to buy down here, missed, and then I bought on 23. Got 5 or 6 points. So can we make a double bottom and then break below to get to the bottom of this range? That's what the bears would like, but they've got the moving average in the way. 3 consecutive bear bars. Well, I think at least one more bar. 1, 2, 3. On this leg, the bears could not take out a prior low. That's the swing point down here. So even with all this action, when they missed on 16, then you have 17. It's like, oh, that's a bit of a problem. Now it's a minor swing point because we haven't got a new high, but the bears are going to try and get back to the lower of this range. Because it's a trading range, I'm more inclined to sell above a bear bar and buy below a bull bar, as opposed to taking stop entries. So that was the 15-minute high one here. So it looks like we're back down in the lower third of this range again. Doesn't mean necessarily just to put your order in space. It usually means to wait for some kind of signal bar in that area. Because I think it's a trading range, I think stop entry traders are going to get triggered and then it's going to come back and test their entries. And that can be difficult to learn how to trade because the moment you enter, no matter how good it looks, it's going to come back and put you on a bit of stress. Here, these buys don't come back. So it looks like more bulls getting out. So if that's the breakout point that we went out of, and this is the range, not expecting buyers to come back in. Oh, if it's going to be a trading range, I mean, this price action has been very trading rangey, very climactic, deep pullbacks. And this is a bull move in a bear environment. So you're expecting this to probably form some kind of counter trend wedge, some wedge pullback to the 200. And so we're not expecting this to go up here, more expecting this to go sideways. Yeah, so that kind of trading. So you buy below a bull bar, low third of the range, and get your 5 points that way. So that's a stop entry for bears. So it looks good, but if it's a trading range, we're going to come back there. So if I'm a bull, that's a target for me. You've got to be able to flip it on its head. So if I'm a bear, I'm selling higher. If I'm a bull, I'm buying lower. But in this example, there's no need for me to take that first buy because it's 4 bear bars. But I can enter 5 points below. I think Al mentioned that a little bit earlier. Said some traders, yeah, I think it was in this bull spike, and he said some traders will get out 5 points below that bear bar. Other traders will buy 5 points below. Betting bears will get out for a scalp. So now 5 bear bars in a row. Yeah, so rather than take the entry and then the scale in, you just ignore the entry and take the scale in. And if the breakout's strong, you'll miss the entry and now you can chase. Many styles. So we triggered the 15-minute bears, 24, 25, 26, 27. So if they sold that, I have too many fibs on here. 25, 26, 27. That's the close of that 15-minute bar. So their one-to-ones are there. Will this be the second entry short bear swing of the day? Maybe. I often use a limit order first just to see what's happening with the pullbacks. But high one stop entry, that's a staple. Breakout pullback, high one. And you can trade on a 5-minute, you can trade on a 15-minute, you can trade on a 60-minute. So you really don't need too many setups. You just need the time to sit in the trade. On the 15-minute overnight, we had this channel. So strong bull channel, and we just rocketed out of it. And we're kind of bouncing on the top of it. At some point, I think we'll get back to the other side of that channel. It doesn't have to be today. Or this will be the 25% of the time you get a bull break out of a bull channel and it doesn't come back. So you can see bulls buying below 18, buying in the lower third of this range. Bulls don't want price to come back down here. We broke out of this range down here. So that was the measured move, or one of the measured moves the traders were thinking about. I'd usually use the smaller range first, at least. So here you've got a higher low. It's generally a little bit more accurate. And we're in this no man's land. We didn't quite break all the way out of yesterday's high, and we're not back at this breakout point. If you're short below 27, 28, you've had nothing but bear bars and price hasn't gone against you, so there's no real reason to exit. In the same way that this trading range today, from yesterday, had a bit of a defensive point in the top third, you can see in this trading range, bulls are trying to defend here. 1 risk, 2 reward, good maths. 6 bear bars. So you can see this 5 bar pullback was a sign we're probably not going to go too much higher just yet. So inside bar 30, inside bar low in a potential trading range, or is it always in short? There's now got consecutive bear bars, and we've got a 60-minute ETH. So inside bar 60-minute chart, inside bar 5-minute. I think the bulls will defend this 15-minute bar. The 60-minute chart has a lot of bull bars. So you'd expect this to get some kind of second leg on the 60-minute, but that second leg can come from down here. Do you want to buy the high 2 here? Steve's asking, how do you deal with 12? Well, when you say 12, I need an entry and I need a stop location. So you're dealing with 12. Are you already entering and you see 12? Where'd you enter? If you're buying 12, you're buying anywhere in here. Al already said, scalp size below any bar, you can get out. Or if you're going to trade it like a channel, you buy with a small size and you're looking to buy a pullback. Or you wait for the pullback. Any bear bar closing on its low, okay to get out below. Consecutive bear bars, now you've got a breakout, so I'd usually get out below that bar. It looks like a really easy thing to do, just buy here and scale in lower, but when you have 3 big bear bars against you, I bet that 99% of traders suddenly don't feel so confident about that scaling. But if you trade this small, you want the pullback because you're only on such a tiny position, doesn't matter. Now you have a signal to try and buy, wait for a second entry, and now you've got a reason to buy, or now you've got a reason to buy. Some traders even waited for another pullback to buy. So depends on your personality as a trader, I think, as well. I get a lot of traders sending me charts, and they buy this, they put a stop down here, and then they exit here. So they have these really wide stops, but they exit within 5 minutes. Probably means the size was too large. Does 31 look like a double bottom buy signal? Well, I think anywhere in here that you trade, you need to trade it like a trading range. So buying here at the moving average, 6 bear bars down, it's probably going to get 1 more bar sideways to down. I'll probably wait for a second entry. But you can see the stop order on 28, we're back there. 29 didn't trigger. 27, we're back at the entry. We're right in this middle bit. So if you're buying, where's your stop? So you're saying, Dinkin Chen's asking about 31, but where's your stop? Where's your target? I think if I want to sell, I would prefer to sell here. Yeah, well, if you've got a stop 8 and you're buying here, then you're okay with a pullback to buy again. If your personality can handle that. Some people enter, see a big bear bar, and they get out. So that's not a good scaling strategy. NB says bar 24 failed to make a new high. Yep, inside bar on the 60 minutes. Likely the bull trend is over. No, I mean, it's a pause in the bull trend. It's closed a gap in a trading range because this is the bear trend, and now we've got big down, big up. So we're high in a range. Therefore, can we stop thinking EMA will be a support resistance level? I mean, it's always a support and resistance. Do we need to wait for a breakout through the EMA? On which chart? Because you're talking about 24, so you're talking about 60 minute. But then I guess when you're talking about consecutive bars, now you're talking about 5 minute. Yeah, so in a trading range, the moving average acts a little bit differently. Traders trade back to it, in my view. So if you look at yesterday, let's make that a little bit bigger. Here is an inside bar. So we've had many legs down, you know, 1 reversal, 2, 3, 4, 5. 80% of reversals fail in trends. So by the time we've had 4, 5, 6, this is probably over. We then go above, that's a new low. We went above a new high. If that's an inside bar, we went above it. So now we're in what's likely a trading range. Traders will buy below or start to buy below and scale in lower. Traders will also sell above the high and sell higher. And the moving average is a magnet. So we get back to it, no one wants to buy anymore. We get away from it, traders trade back to it, and we just crisscross. In a trend, we go far away from the moving average, traders buy it to get away from it. Now you can see everyone's trading back to it. So that's why I said I think we're forming a triangle, and that triangle is scalp sizes get smaller and smaller as traders stop going for 20 to 15 to 10 to 5 to 4 to 3 until we get a new direction. So when there was 6 bear bars down here and everyone was talking about always in short, so there'd be buyers below these bull bars. I was one of them. But probably the same thing will happen here. Paul saying scaling down to micro is very helpful. Absolutely. Particularly if you can't click the button when there's a strong trend. That was an issue of mine for a long time. So, you know, the ability to have micros there, just click the micro tab, click 1 or 2, click enter, and just practice. And don't exit within 3 minutes, you know what I mean? Wait for a bear bar. And there are many days, you know, even yesterday, you sell below any bear bar and then you just move your stop above a bull bar. Well, you never got out until down here. So okay, NB saying the EMA doesn't act so much as support resistance. Yep, correct. Now I'm with you. Yep. So once we saw trend to trading range transition, okay, so we've got a pullback here, which is more than 50%, basically retraces the whole leg. So, oh, trend's finished. This can still break out up here, but there's no more breakout trades really. Can we sell without worrying about the EMA? Oh, okay, now I get what you're saying. Yeah, so you could sell or buy. The issue is, I think you pick one side. Like at the moment, I've been picking the long side. I've taken no sells except to get out of longs, and I'm going to keep doing that until I see a reason to stop. So even though I could do both, I think it's easy to do one lot of mental gymnastics. Is 29 a gap bar swing? The gap bar is usually a scalp, in my view. Many bars below the moving average, and then you've got a gap bar. This turned into more, but that's just my view. Oh, good question. W3S0. How do I stop myself from entering on stops and reversing repeatedly when the market behaves like 51 and 66? Okay, so firstly, you need to download NinjaTrader. It's free. Market Replay is free. You can download a whole bunch of instruments every day for free, and you can practice. So when the market does this zebra stuff, this is time of day related. It's the end of the month, bad time to trade, but also the market has already moved 56 points plus the gap, which is way more than an average day's range. So you can see if I draw a line through there, once that move was finished, so on an instrument level, you need to know what an average day range looks like. If that's the only time of the day you can trade, different story, but that's why we like to trade the open in those first few hours. That's usually where the juicier moves are. If you can only trade this part, you have to accept it's a trading range, which means the moment you enter, you're going to get disappointed. Good looking bear bar, bad follow through. Good looking bull bar, reverse to its low. Good looking bear bar, went above its high. And if you think you can just scale in regardless, what do you do here? So you exit, oh, it comes back to your entry. It's not an easy place to trade, and that's why we don't recommend newer traders spend any time in barbed wire. Because instead of being calm and centered, like, yep, I understand the price action, oh, it's doing something surprising, your heart goes up and down, and you get frustrated. Is it down, is it up, is it down, is it up? You get dizzy, you get upset, you lose money. Yeah, I did it for 5 years. So hopefully, if you're in this trading room, you won't need to do it for another 3 years. I lost a lot of money doing that. I used to get so upset. So for me, I had to practice a lot of different drills, had to do a lot of market replay, and get very aware of what I was doing. I was in the market to prove I was a good trader. I wasn't trading price. I was trading me and my self-esteem, which was very low. But no one knows what the next bar is going to be. But I do know what trades I will take. Sometimes that means waiting for 2.5 hours for the thing not to set up, you know. That happens as well. It's asking what made you not give up after so long. Well, if you ask the people in my life, I think I've been called stubborn as a mule. I know I'm Aries, fire sign. I don't know. No, I knew everything's a behavior, right? Everything's a habit. And when I heard really good traders speak and trade and see them trade, they have really good habits and they're really disciplined. And I really wanted to develop that. Everyone can develop discipline. Now, here's a bear bar at the moving average. So there are some traders who are going to sell below that. Now, I think this is the middle of a triangle. So I'm going to stay flat. But if you think this is a spike and a low one, then you sell below 33, you have a stop up there, and you have a chance it's going to be a high. But I'm comfortable enough that I'm not going to decide to sell here Like, I won't take this with my account, but I'll mentally pretend I'm in it, and then I'll just join down here. Taurus is most stubborn. Actually, I've got a few Taurus mates. We all hang out together. We are pretty stubborn. So this is, like I said earlier, I thought might be some kind of double bottom that we could then break. If it's a trading range, it'll break and reverse. If we're not going to do a big range, bears want to flip below and come to this breakout point. See, what percentage of returns is consistently good as a profitable trader? More than the stock index you're trading. If it's not more than that, you should just park it. No, but when you're learning, you're just losing money hand over fist. So 33 triggers, we come back. All right, so trading range behavior still. Just divorced one. I'll admit, stubborn is annoying. So we're still in this 15-minute signal bar. I don't think 15-minute bulls have given up. But suddenly, not a lot of buyers above things. Well, it depends on your account. You're asking about percentage, but on a small account, it's going to be massive. On a large account, it's going to be very small. So I don't know. To me, personally, I just focus on the points. And then people won't believe you when you tell them. Because if you run a good business, business returns 30% plus. And that's considered high risk. So I think we're in breakout mode. You can be short on the 15-minute chart. Bears want this low one sell, spike, pull back, and then some kind of sell here to close that gap. There's a chance if they close that gap, they'll come more into this range. Stubborn is an essential skill in trading. I do believe so. Yes. Stubborn to follow your own rules. So bull's trying to get a second buy signal. It's just hovering below the moving average. I think bulls want to see it get above 33 again. Sorry, get above 33 for the first time. We say stubborn's an essential skill, but also flexibility, you know. Like if you're a surfer, you go down to the beach and you're like, yep, I'm going to surf in the morning. You go down there, there's no waves. So it's like, well, you can go for a swim, but there's no waves. But as a trader, do you turn up to the market and say, no, there's no trades today? Well, this is not this kind of thing I can trade. You can't stop order by 34. We'd never win a tick above it. So we had a bull spike, pullback, two-legged pullbacks, but where's the 15-minute buy signal? So it's an important time, I think, here. At the moment here, you couldn't buy below anything really. It was so fast. Here you can buy below, you can sell above. Did 15-minute bears get their one target? Yeah, so if they sold the close of that bar, 24, 25, 26, 27, not quite. TradingView does have replay, but it only allows you to buy the close and sell the close. So I can only take an order here. I can't use limit orders, but it does have the advantage that it tells me my open risk, which I think is really useful. Big down, big up, confusing. Can this become a case of an endless pullback? Yeah, it can. If it, because the endless pullback dips below bars and traders switch into limit order trading, in my view anyway. So you can buy below that bull bar, buy below this bull bar, you can make money. That bull bar never triggered to go above, so it wouldn't buy below it. That bar did, so you can. So you can see it's crossing over all the breakout points. And what you need is someone to get stuck doing that. So for example, you know, traders buy below here where I've got these red lines, goes below, pulls back, they can't get out. How the bar forms and get there. Yeah, exactly, with TradingView. Yeah, so you can't use limit orders on there, and but it is good for I think practicing price action. You can just sit there and click through the bars. Okay, do I want to be long, short, or flat? Okay, how would I manage that? It also has a really great feature here where I can go random bar, and it just picks a random day on the 1st. This is dope. So I can just play a random day. Where's the open? Must be miles away. Oh, cool feature, Tim. Anyway, you can play any day you want without having to scroll to it. So. Steve's asking, is it your general rule not to reverse after 2 consecutive bars in one direction? Well, if I'm long and I get consecutive bear bars against me, so it's basically a breakout, I'll usually exit below the second one because that's a breakout and follow through against me. And I usually trade breakouts, so my trade is failing. $36 close of the hour looks like it's going to be an inside bar as well. So we've got an II breakout mode, and then we're going to find potentially the next swing. We might already be in it short, if that's the case. More and more bear bars below the moving average. If you sold under 33 or sold the close, if you sold under 33 or missed it, you've had time to jump back in. You've also had time to buy below bull bars. So. I don't think this on the 60-minute chart was a great buy the close bar. I think it's a great looking bull bar, but it's under the moving average. It's usually better to buy a pullback. Okay, so can the bears get below some of these possible double bottoms? I like to look at good signal bars and then measure, okay, if I bought there and scaled in, what happened to me? So far, they haven't had to scale in. Oh. I've got a bar count indicator. So 36, good bear close below 18. It's the last strong bull signal bar in this leg. Is this 1, 2, and then bears need another leg down? Another good 15-minute bear bar, but sitting at the moving average. Zane's asking, what type of trade do you like best? Breakout pullbacks. Yeah, breakout pullbacks. I'd love to say I had some fancy advanced trade, some secret technique or trading strategy. No, I just break out pullbacks, classic Brooks trading course stuff. Where are all the bears below 36? If you sold below 15, you could get out. So what do you do here now? 33 took off, came back. Now you're back at the entry. So is this going to be the low one for the swing of the day, or have we spent too much time here? That'll be the question. Can you sell above 36? That's what I think, breakout mode. That's the 15-minute high one up here, where I have that red line. Because that's a good signal, I still believe they'll get out. Why are the bar counts green and red? The green is every third bar, so that's a 15-minute bar. 1, 2, 3, 1, 2, 6, 9. So I can see the 15-minute chart on here. And the red's the 60-minute. Bulls really want this high too. So these traders never had to scale in 1 times. So I was just saying before. Bull bar closing on its high on the 5-minute chart. I think no matter what you do in breakout mode, you've got to expect sideways more than a trend. I think it'd be more important if 37, 38 trades above it and gets above here. We thought it was going to be a measured move down. Bulls want to do the opposite. If I was short below the moving average and I see that, that's a bit of a problem. But we never triggered the sell below 36. So it's not trapping everyone. We didn't trigger the buy above 24. We did trigger the buy above 12. So it doesn't mean we have to get back there, but I think you could have got out break even anyway. You're buying above there. So we've got a whole bunch of traders on today as well. We've got Mr. Tim Stout joining us from Barcelona later. And then we've got Mr. Brad Wolf from Houston, I think. Brad might correct me. I thought it was Houston. I know it's Texas. Oh, damn it. Sorry, man. I'm from so far away. Like, I literally live near Antarctica. You took any of these sells, it didn't really put you under much stress. Buy at 50%. I'm not going to buy 50% of anything unless I'm in a trend. In a trading range, I'd usually enter at extremes. So, buying lows, selling highs, that kind of thing. But you can make it work. Trend bars work really well for that. Yeah. Big breakout bar. It's probably the traders that sold above, sell higher, and get out. So you can use highs and lows as magnets. If this is a bull bar on the 15-minute, that would be better for a buy, but I don't like this up here. No one on the 60-minute wants to buy a bear inside bar. So I think it's still going to be buy below, sell above. Yeah, TRD, and then it's a good way of thinking about it. Trap traders, when they get their chance of breaking even, the move is done. Yeah, in a trend, you know, the way I see it is, in a trend, you're looking for signal bars to get in. In a trading range, the signal bar is the time to get out. So bears are getting dojis. They finally get a bar closing on its low and they exit. Because you're just betting that you won't get the follow through. And so then you get a surprise. Everything's sideways, it's not going anywhere, traders are selling, and then all of a sudden it's like, oh, hang on, we're breaking out, oh dear. And so these traders can scale in or they take a loss, but then we usually come back to their entry where there was traders stuck. See how we rebounded? So you've got to be careful not to be this trader, but instead trade the test back. Patience is your ally. So bad follow through 37 for the bulls, and not really putting a lot of stress on these bear entries. So if 39 is another bear bar, the bears just keep selling. Someone's asking, would I swing for long at bar 30? I don't think there's any swings in the triangle. In my view, I mean, you could try and construct one, but I mean, I'm only looking for a bar or 2 or 3. What's the average bar range today? Probably 8 points or so. So anything just under that. You can also get a sense of what traders are doing here. You can say, okay, if you sell that bear bar, okay, everyone got out 5 points and 1 tick. So they got out exactly at 5 points. There's 5 points. Traders buying 5 points below the low of that bar. So bulls are buying 5 points below. Bears are selling for 5 points. Could 37 be a sign to get out? Yeah, that's another thing about trading ranges, the relief bar. You're buying here, you can get back out. Buy here, you can get back out. No one's sold down here though. Yeah, great EX. I'm glad you found that valuable. It's from losing a lot of money in trading ranges. If we go below this II on the 60-minute chart, then I think this 10 points is up for grabs. Bulls need to do more. Get rid of that. So far, that was the short of the day up there. Well done if you sold 5,800. I thought about it, but I didn't take it, so it doesn't count. So triggering another signal bar on the 15-minute and on the 60-minute. I think we're still going to overlap breakout points. So good close, 39. Will traders sell here? Will they sell the test back to 36 low? I was right on for calling the trading range. Yeah, and you can, this pattern, if you look for parabolic wedge tops in his encyclopedia, he has many of these. And most of them do some version of sideways. A very strong move to a price, and then difficult to make money buying up there. So can the bulls close that gap? So bulls have been buying 5 points below, which we just said before. So bulls buy the lows, buy 5 points below, bears sell 5 points above. Who's going to win? So we just went below that low. We haven't gone below this bull bar, potentially stops there, or the 7 low. I think traders prefer the bull bar if you've got stops, but if a trader thinks this is the low of a trading range, then they're buying with a 3-point stop, and the moving average is about 10 points higher. Low risk, big reward, low probability. So bulls buying under this 15-minute bar, if that's where they entered, that's their scale in, so their midpoint's probably there. Can you buy 40? I wouldn't be buying 40. I mean, you can, it's low in a trading range, but after 39, probably wait and see whether 40 and 41 are bull bars. It's a bear channel, so traders who are selling are also happy to sell like this. You sell and you wait for a pullback and sell more. Is it 3 legs down? 1, 2, 3. It's definitely 3 legs down. Big bull bar, sideways, reverse. Big bear bar, sideways, reverse, or more down. $15-minute chart, you can also see the pullback, 1, 2, inside bar, down, went above the high. I'm not going to buy above 40. I sold small on a pullback test, so I'm expecting it to come back up into this range. So the magnets I've got on the price, on the chart here, I think are the most important. I think there's a couple of different important prices. This was the range we broke out of. So as long as we stay above this range and work higher, then back up to yesterday's high, back up here. But if we collapse into this range, this becomes a failed breakout, and now this whole piece becomes a range, in my view. Oh, well done, Ari. All right, good on you. Yep, 37 didn't trigger. So that's what we were talking about. If it triggers, well, then everyone wants to buy above. No, no one wants to buy above here, not here, not here. They're buying below and lower. Yeah, good on you. Mate, if you take that and go and research 50 to 100 charts, just looking for that concept, you know, set a timer for 25 minutes and just do 25-minute reps of that. And when you notice other stuff, write it down, put it somewhere else. Just take that concept. You'll be able to build a strategy out of it. That's one of the great things about Al's course, looking at stop entries. We went above a bull bar, went above bull bars. And as long as traders are buying above bull bars, we come back and let them out. Traders are selling below bear bars here. Not here. Here, yes. In good reversals, the last entry doesn't trigger. So look at the difference between this sell signal and this one. What's the difference? Exactly right. The last sell below was there. So we really look at this bar. not this one. This goes all the way back up. If you sold the close, you can get out. If you sold and tick below the low, you can get out at the close as well, or you get out above consecutive bull bars or reverse back to the moving average. But this trader got trapped. So bear inside bar. Do you have to get out above? I think if you're short, you can stay short. You haven't had a bull signal bar to get long. So if you're trading with limit orders, you're buying and scaling in lower. 29, do you mean bar 29 today or yesterday? Yeah. Yeah, it's a good sell the closed bar, but for me, after so many late legs, I'd usually stop selling below things. Just 1, 2, 3, 4, 5, 6 reversals. At some point, you've got to stop selling aggressively below or buying aggressively above. So that's why we're talking about 12 up here. Here, it's okay to buy aggressively because you're breaking out. So you're betting on a breakout. By the time you get 6 or 7 signals later, everyone else is sitting on profits. II is a credible trigger. I don't trade IIs the way other traders do. I generally leave them and wait for a breakout and a pullback. So I don't have like a bracket order to go long above, short below. I wait for the inside bar to get follow through, or I wait for breakout and then pull back to the II. Oh yes, go. Beautiful. Then you want to take that scalp. Bulls buy 5 points below to get back to the low, sell at the low. Your beauty. Just paid for the trading room for the next couple of months. At least 1 month, come on. Ari's sitting on 20 points, well done, mate. Smashing it. Yeah, so you just take that concept that Al talks about, and to be honest, Al drops about 500 concepts. The same with Rose, Brad, and Tim Stout as well. Just pick one. So I've got a list of things that he wrote down here. You just take one of those concepts and do a whole bunch of charts on it. So he was saying traders are buying 5 points below bars, which is what they've been doing all in here. So you assume they're going to do that. Now, instead of doing it, I know at some point they're going to get stuck. You wait for them to get stuck, wait for them to get back to where they need to get to, and you put an order just under there. Is it always going to work? No. So these 15-minute bulls, what do? Oh, well, if I was long and had this many bear bars against me, I'd probably get out. So ETH, another 60-minute bar. Ooh, consecutive bear bars. Ooh, it's a bit of an issue for bulls, isn't it? Un problème, as we say en français. Is a single inside bar ever worthy to get to take? Tim Stout is coming on afterwards. He is a bit of an expert on inside bars. I'm going to defer to him. I believe he waits for the follow through. I mean, it's context driven, of course, but I think he was showing on a prior stream, waiting for the inside bar, waiting for follow through, and then buy the close, sell the close. So please ask him when he jumps on. But I like the breakout pull back to it because it's a triangle, right? So you break out of the triangle. You know, maybe the triangle's here. It's always obvious in hindsight. Breakout, pullback, you know. Thanks, Trader Chick. And then enter on stop for measure move those 2 bars. That's cool. That's cool. So if you're short and you've got more bear bars, you can stay short. I mean, we're we're just chopping through layers of support here. Where are all the bulls buying under this bull spike? Can this be a measured move down here? Let me use the 15-minute chart. That would be for a new low of the day, though. So here you got a bear spike, basically a low 3, wedge bear flag. 1, 2, 3. So what do you call that? A truncated wedge. 3 pushes up, back against the trend, and then sideways. So I think there are a couple of transition points today. That might be helpful for next time. First is gap up and 6 bull bars. So you definitely don't want to be short. All right, so you can be flat, you can be long, but don't be short. Don't sell the close here, don't sell above anything, definitely don't sell below anything. Just wait for this to have another bar in that direction. There's your high 1 buy. Or it can be here. But if you're waiting for a pullback, you're in what you think is the strongest trend in the world, and it's a 5,800, and you think it's going to go to 5,900, and then you get out, or you're waiting and you get pullback that goes all the way, but not quite to the swing point. This has just turned this into a trading range. You get your fib out, split the range up. You want to be a buyer in the lower half, you want to be a seller in the top half. But you really want a signal bar. Someone asked, is 25 a major trend reversal? And I said, I didn't think it was a major trend reversal. I think it might be a minor trend reversal. But if it gets down here, we'll say, yeah, he's right. It was a major trend reversal. And that's because usually the break that fails sets up a much more climactic move, but this acted the same way. So they were right. 6 bear bars. You need at least 1 more. Good sell signal triggers another leg. Now we've had 3 legs down and starting to go sideways. But as long as you were trading as a channel in here, I think you're okay. Are we going to test today's low? Well, usually by bar 18, we've seen the high and the low. So looking more and more certain that that's going to be the high. I said earlier that I thought if we break back into this trading range, then this is up for grabs. Because at the moment, if I'm a bull, where's my stop? It was here, then it was here. Maybe it's here, maybe it's down here. And that's a problem. We've had a couple of those days. So here. So you're very confident about this buy. To get a new high, fantastic. Trying to buy again. Oh, maybe it needs a bit more of a pullback. This is the stop. Okay, we're going to turn into a trading range. Oh dear, what happened? Oh, maybe here's the stop. So if you're a newer trader and you just keep scaling in endlessly, because you're like, it's got to be a trading range, it's fine, it's fine. Al says 80% of the time you can avoid a loss. He's not saying this. Now what do you do? It just broke every swing point. What you need is, in a trend, the swing points hold, or here, the breakout point holds. But once that has gone, things get very climactic very quickly. So that's the warning. If you're buying in here, you're not buying here with a stop down here, scaling in. If you're going to buy here, you may as well just wait to buy there. 60-minute chart, breakout of a bull channel usually fails in 5 bars, 3 to 5 bars. I've had 4, but we'll see. Not a lot of stop entry bears yet. Okay, so we broke that swing point, and we're back to the top of that breakout point. So we've got a magnet here, we've got a magnet open of the day, and we've also got the opening gap. So 44, another good bear bar. So we're still always in short. We broke the bottom of this trading range, but we're sitting at support. So I think you still have to trade it like a channel sell and have a position to scale in. We haven't gone above a bull bar since 32. Someone said correctly 37, the relief bar. If I'm a bear in a bear trend, I can't sell below that bar. Maybe I sell the close type trading range. A lot of traders will sell above these bear bars, sell higher. So they got back. So there's no 60-minute bears that are stuck. That's not by the close, I don't think. 4 bull bars by the close on the 15-minute chart. You can buy below. Is that a stop entry? 803.75. Okay, so bulls got stuck on that last entry here, but if you scaled in, you got more than break even. I think we've had 3 legs down on the 15-minute chart. This is what I was saying about selling. You got to sell like it's a channel, sell higher. I'm not looking to take the first buy signal if one appears. Someone's saying, I feel tempted to sell the closed. We're at the bottom of a channel. Yeah, so this is a channel in a broader trading range. So the way I trade a channel is, as soon as we have deep pullbacks, you buy, but you're looking to add the rest of your position lower. If it takes off, great. Yeah, take profit, happy days. But you want it to pull back. So that gives you the right psychology to handle pullbacks. So you sell, it pulls back and creates another bear bar, you can sell more. If 45 closes like this, I get out of my shorts. Is a micro channel of 15-minute? Not quite. So 2-bar reversal 45. So I think some bears will get out above 45. Some bears who sold are going to look to sell higher, but we're at support. Doji's on the 15-minute chart, so not a good sell to close on the 15. Martin, I tend to make good money in the mornings, give it back this time of day. Yeah, just take a look at your stats. You can use software to do it. Lots of like TradesVids and TradeZella and all that kind of stuff will tell you where you win and lose. And it might tell you, hey, after 2 or 3 hours, you're done. That's what my stats said. It said, don't trade before the open. And after bar 48, you're pretty useless. So I don't do that. It's a really easy way to increase your edge. And Martin, here's the funniest thing was, I thought they were my best times. I thought my pre-market shenanigans, like, I thought that's where I made money, but the data's like, no. Oh, okay. So I took the data out and put it back in just to check. No, apparently the computer's right. So Trading ranges. Looks bearish, reverses. Looks bullish, reverses. Looks bearish, reverses. This was the significant support. We've tested it. We can still come back up here and go down, but you can see a lot of traders, I think, taking profit on the 15-minute chart. Maybe there's some gaps above. That's it, Trader Chick. On it's a Friday. There's no need to, if you worked hard all week, don't give it back on a Friday arvo. You'll be miserable to your partner and your kids and family and everyone else. Tell them how you had such a great Monday to Thursday and then you got robbed on Friday. No one wants to hear that. I've been told. Just don't tell them. Yeah. They know. They know. They can see your vibe. They're like, I don't want to ask him about work. Paul's saying, can you explain buying after 5-point scouts do not work? Yeah, so I said originally, you take a concept that's another trader's presented, you're like, oh, that's really interesting. And then you start doing some testing. So I was saying, well, if you look at some of these bars, buying below 5 points below a bull bar, traders were buying 5 points below, and then they did it again here. This bull bar, and so I thought, well, I think they'll probably do it again down here. And so I thought, okay, well, if they do that, they want it to come back up here, but at some point they're going to lose. We're below the moving average. Someone's got to lose, right? So when that closed so bearish, when I trade limit orders, I want it to fill with a nice little wick and then bounce up. You want it to tap through and go up. But when it closes like that, you're like, oh no, that can go down. Sometimes you'll take a loss. So they want to get out of that as soon as possible. So what I was doing is providing a small amount of liquidity for them to get out. And I'm doing the opposite. I'm trading a breakout pullback. And that's because this buy signal did not trigger. If traders went above that signal bar in my research, they will usually buy it below. But when it does not trigger, not as many of them are happy to buy below. So that was a bad place for them to be. So if I got filled, great. If I don't, it keeps going down. I have to look for another trade. But so 46 consecutive bull bars. What do you do here now if you're a bear? If you're a bear, how's that scaling looking? I think we're still going to do more of this. We might do more of this sloping up. Can you buy a test back to 45, high or close? I'm not going to buy at the moving average. I might be convinced on the 15-minute chart, but this 60 minutes not looking good for a swing up. Do you want to buy consecutive bear bars under the moving average here? Not sure. Will traders sell here? We have left a small gap here. Yeah, I like what you wrote, Trader Chick, about different trading styles. What's super interesting when we were watching Al and Ali trade at the seminar was that they were both trading different styles, both based on a lot of Al's work, but they were doing it for different reasons, but all their entries were at similar parts of the chart. And when we asked them about that, what Al said was, if you had 10 traders up here, they would all be trading their own style, but they all tend to do similar things at similar times. And that's really interesting because they're not exactly the same style, but they can all be profitable styles. I think that's really cool about trading. It's not just this is the only way to trade it. A trader doesn't have to buy this bar, they can just buy below, scaling lower. Like I was saying before, they can buy a measured move down and now they're made money. Another trader, Ari, was like, no, you guys are trapped, I'm going to sell. So actually, traders made money buying and selling here. So it doesn't mean you can do it on every bar on the chart. You probably just lose money or have no edge left, but it gives you a bit of flexibility, I think. On the 60-minute Globex, breakout, pullback, and a bull bar would be good. High 1 or high 2 here, that would be good for bulls. I would not short the 3 bull bars. No, I thought this might be a breakout pullback sell here, but now that we're up here, I'm not interested in that short. I think the gap close is still on there. Is that measured move? So you can see bears panicking out of that test of the moving average. We've just closed that gap. There you go, that was the low one sell. That's cool. Bear spike, pull back, sell below 33. Cool. Gap closed. Still at this magic point, eh? Isn't that interesting? We're still at this top third. Wonder if a lot of bears got trapped by that. Where's another day with a bear? This one. Oh yeah, this one was funny because I'm measuring this whole range and we're just sitting between the two of those ranges. But if you're quick on the sell, you did have a safe sell signal. And then coming into this day, same again. So the stop's still in the same place and you're still doing the 1 risk 2 reward trade. We've got Mr. Tim Stouts joining us, I think in Fiverr. It's 1:30. 39 and 44 look identical to yesterday's hourly bars. Breakout, bad follow through. This was 40s. The problem for the bears, you really want a big bear bar to get follow through. Didn't get it here. Now you got 3 bull bars. Can the bulls get a buy signal above the moving average? Again, for the lonely bulls, still at 12 high. Thanks, Dean. Yeah, I was watching Alan. I'm like, I wrote down a few things that he hadn't said, and then literally in the last 15 minutes before he finished, he mentioned everything. The weekly mid just went through, and I was like, man, I've got nothing fresh. So like, okay, I'll just have to roll with it. Hard act to follow. It was even more difficult at the seminar because Al asked Brad and I to commentate while he was trading, and when we practiced, it was a bit awkward because I'm like, man, I don't want to tell you what's going on. All the stuff I learned about trading, I learned from you. You know, he was like, no, please talk, please commentate. So then we had a good time. It was fun. I had this feeling that at some point he might correct me and be like, actually, it's not a wedge bear flag. I'm like, oops, sorry. He's not that kind of guy anyway. So, but you know, strange worries. So now we're doing the same thing we did to the bulls, we're doing to the bears. So we were pushing back down onto a swing point. If you're short, can you have a stop above here, somewhere above here? Because it's a trading range, I think the first line of stops are a bad place for a stop. I think you need it 2 away. So if you're in here, traders have a stop around here or at the swing point here, but in a trading range, I think it's actually better to have it much wider. These boundaries are actually places where traders are getting in as opposed to exiting. That's it, mate. Performance anxiety. Yeah, it's pretty funny. But so coming up to the end of the 4th hour, Bull's trying to reverse this endless pullback we've had for the last couple of hours. Now we're back above the moving average, but I think we're still in a trading range. But what I will do, I will jump off, and Mr. Tim Stout will jump on. So thanks very much for your attention today, and good luck trading the rest of the day. So thanks, everyone.